Hello and welcome to this video. I'm super excited to share this with you. What I'm going to share with you right now is one of our most powerful strategies on our team. And you might think, oh, if you're giving this strategy away for free, it must not work very well. Well, that could not be further from the truth, my friend. People are making incredible amounts of money with this strategy. In fact, there's one gentleman using this very strategy who started out with $1,500 in his account and turned that into $200,000 in 120 days. Crazy, right? Now, I am not saying by any means that is what you're going to do, okay? You probably won't, okay? But shoot, what if you did 10% of that? A quarter of that? I mean, the bottom line is this strategy alone can set you free. So what I'm going to do is I'm going to walk you through the exact strategy. And I hope I don't get in trouble for this, but I feel like if I pull the curtain all the way back, it'll really excite someone and inspire them to take action on this and really begin to change their financial future. Okay? Now, the first question you should be asking if you are a real trader is, why this strategy? Okay? Like, what is the math behind it? Okay, what you have to understand above all else is that our stop loss as traders, our stop loss is our profit regulator. Okay? The size of our stop loss determines how many dollars per pip we will make when the trade goes in our favor. Meaning, the further away our stop loss is from our entry, the less lots we can put into the trade, which means the less money we will make per pip that we gain on that trade. The tighter the stop loss, the better, right? If the system is conducive to precise entries. I call it the old paradigm versus the new paradigm, okay? You see, in the old paradigm, traders are conditioned to believe that 30, 50, 100, 200 pip stop losses are normal. Okay? Well, in the new paradigm, we're talking about 10 pip stop losses, 5 pip stop losses. So the choice is pretty obvious, right? So let's show the math real quick, and I have a couple of examples up here. Okay, trader 1 is in the old paradigm. Okay, puts 2% risk into a 100 pip stop loss trade. Okay, listen, it could be 75, it could be 150, whatever. Okay, we're just doing 100 pips for easy math here today. Okay, so when trader number 1 gains 50 pips, well, that's a 1% return on their account. Okay, 100% gain, or 100 pip, sorry if I can only speak today, 100 pip gain, he's gonna gain 2% on his account. Okay, so the way that I got that right is, so if it goes backwards on us 100 pips in the wrong direction, right, and hits our stop loss, which if you don't know what that is, stop loss will automatically close out the trade for obviously a loss, because you want it to protect you from losing everything, right? So you place your stop loss based on the pattern, and if it comes all the way down here, well, I don't want it anymore because now the pattern isn't valid, right? That's what a stop loss is. And so if we have our stop loss at 100 pips, okay, well, that's where we set our risk. And if we're risking 2%, if it goes 100 pips against us, we lose 2%. Now, in that same trade, if it goes 100 pips in the positive, in our favor, right? Well, it's just 2% in the correct direction that we just gained. Cool? I hope you're with me, okay? Now, 2%, that's nothing to laugh at, okay, or be snarky about. But at the same time, trader number 2 in the new paradigm puts the same 2% risk, but this time in a 10 pip stop loss. So now, when trader number 2 gains 50 pips, well, that's 10% return on the account. 100 pip gain, that's 20% return on the account. Okay, how I got that right is if it goes 10 pips against us, we lose 2%. So if it goes 10 pips in our favor, we gain 2%. So for every 10 pips, we're gaining 2%. So 50 pips, well, that's 5 times the 10 pips, right? So 2% risk times 5 equals 10, which is how we get the 10% return on our account on a 50 pip gain. And so obviously 100 pips is double the 50, so you double that, and that's 20% return. Pretty cool, right? So the choice is obvious. And this is why I'm so excited to show this to you, okay? Now, what you're seeing here is one of my favorite products in IML, hands down. Okay, we have 7 products total, but this one is called the Harmonic Scanner. All right, this product, before it was added to our product suite, used to sell on its own out there in the marketplace for $5,000 a pop, and they were selling like crazy. Okay, that's how powerful this scanner is. So what it does is it scans the entire market for these patterns called harmonic patterns, right? They're based off of mathematical Fibonacci ratios, okay? And listen, luckily, you don't need to know any of that because the software does it all for you, okay? Now, why should you care about harmonic patterns? Well, I'll tell you why. Because these are an extremely high probability form of market analysis, okay? There was a study done of over 100,000 of these patterns by different entities, okay? We just like compiled them all, okay? Over 100,000 of them were done, were analyzed. And the average success rate of these patterns, get this, was 89.33%. So I think it's safe enough to say that 9 out of 10 patterns are going to be successful, okay? And success in these studies was defined as a 15% minimum gain, which I'll talk more about a little bit later, okay? But let's look at the chart, okay? So as you can see, there are different kinds of patterns, right? So you got, here, let's go. You got your Gartley, your butterfly, your bat pattern, shark, your deep crab, okay? These are all the different kinds of harmonic patterns. And so right now we are on the odd JPY, Australian dollar, Japanese yen, and we're on the 15-minute chart, right? That's typically the best chart we use this strategy on, is the 15-minute, okay? So the scanner found this pattern here, and it marks it out for you, right? With this yellow butterfly wing looking thing, right? In the yellow, right? And so what this does is it indicates the direction of where price is probably going to go, okay? So it tells you, here's a good spot to enter, here's where you set your risk, and here's 3 good spots to take your profit. That's what TP stands for. Take profit number 1, take profit number 2, take profit number 3, right? Now, understand, these are not guaranteed to move here, okay? But these patterns are pretty accurate, like I just talked about, right? So here's how it works, right? When the pattern shows a W like this, W, okay? Oh, sorry, I got a new mouse, so I'm trying to get used to this mouse today, okay? So when it makes a W, it's a sell, okay? Makes a W, it's going to come the opposite direction, like this one is right now, okay? As you can see, I'm in this trade right now. I'm pretty pumped about it, okay? We'll talk about it a little bit more. Now, another way to look at it is obviously, if the entry price is here, the stop loss is above it, right? The take profits are beneath it. That's where you want it to go. You want it to go in the direction of the take profits. You want it to stay away from the red line, right? So let's dig into this chart a little bit and explain everything that's on the chart, because there are a couple things on here that you need to add, okay? And don't worry, all right, there is a step-by-step training for all of this on the inside. So don't try to study this right now or figure it all out, because we've got it all the steps, all the training for you on the inside, okay? So first thing you need to add are what's called Bollinger Bands, okay? They don't come on here, you need to add them, okay? The scanner just comes with the patterns, okay? So you need to add these Bollinger Bands on, these gray things right here, okay? You need to add the RSI indicator on, this bottom one right here, and then also the 310 oscillator, the MACD, aka MACD on here, okay? Now, the Bollinger Bands and the MACD, there's a step-by-step training done by the CEO, Mr. Christopher Terry himself, okay? A quick video he does where he walks you through exactly how to set up these Bollinger Bands and the MACD, okay? The RSI, I'll just tell you because it's so dang easy, okay? You'll click on the navigator button up here, okay? You'll go to the oscillators folder, and you'll drag the relative strength index, is what RSI stands for. You'll just drag that over into the chart and make sure it's on 14, that's the default setting for RSI. That's the standard. You hit OK, and it'll create this indicator down here. Okay, so that's what we add to the scanner: Bollinger Bands, RSI, and the MACD. Okay, so let's get into it. It's very simple. Okay, there are 4 rules, just 4, that we use to identify a good trade. Okay, 4 criteria that you look at, and that's it. And it's on this notepad here that I have up. So let me scroll down here. Okay, so here are the 4 rules right here. Okay, now the first one is, this is the screener, the first screener. Okay, does price touch or move past the green entry line? Okay, if no, it does not, then that's not our trade. Okay, that's not ours. That's for somebody else. That's not ours. Okay, if yes, then 2 of 3 of the next criteria must be met. So these 3 right here. Okay, does price touch or go past the first Bollinger Band? Does RSI go above 70 on a sell or below 30 on buys? Okay. And then lastly, is there divergence between price and MACD or RSI if you want to do that? Okay. Now divergence, for those of you who don't know what that means price is going in one direction and the MACD is pointing in the opposite direction. There's divergence in the 2 items involved. Okay, so let's look at a couple of pairs here, and let's analyze them. Okay, so let's look at this one right here. Okay, the trade that I'm in right now. Okay, so does price touch or move past the green entry line? And actually, I should talk about this one first. Okay, on shark patterns and shark patterns only, which this one is, okay, which is why I want to talk about it right now. Shark patterns are going to give you 2 entry lines. It's more of a zone, if you will, okay? And what we want to happen on a shark pattern is we want price to be as close as possible to the second entry line. And all three criteria must be met. Okay, so this is a shark pattern. So let's do this. Does price touch or move past the green entry line? Sure does. Jumps past the first one, and then the second one, it's getting pretty close there. It's like kind of right in the middle, right? So I'll take that. I'll take that. Does price touch or go past the first Bollinger Band? Well, here's the first Bollinger Band right here, blew past that. Okay, second one, third one. Okay, we're getting into the fourth one up here. So that's pretty strong. That's pretty strong confirmation right there. Does RSI go above 70? We want to sell this, so we want to see it above 70. So right here, okay, let's get the crosshair out. Okay, that is where the D point is. So right there, oh, come on, mouse. Okay, so right here, it's definitely above 70. Okay, definitely above 70. As you can see, the gray dotted line is 70. The black dotted line is 80. 80 means it's like super ready to go into a sell, right? And so this one's actually touching 80. So this is a pretty good indication right here. Okay. Now lastly, is there a divergence between price and MACD or RSI as well? Okay. So what I want to do is, now you can do it from the X to the D, or sometimes I like to do it from, you know, the next highest peak, right? So like right here. So right here, bang, to there. That's where the D is, right? Okay. And then here we've got, okay, so right there, whoop, whoop, jumping all over on me. Okay, so right here, okay, so that's where we're at. And clearly you can see one is going down, this is going up. Okay, so yes, we have divergence, and that would give us all three criteria to be met for this shark pattern. And so that's why I chose to enter. Okay, so now let's talk about the exact entry. Okay, it's followed my four rules. So now what do? How do I actually enter this thing? So let's talk about it. Okay, I've given you three entries here. Now I want to preface this by saying, if you're a brand new trader, I want you to just pick one of these and master that first before you start doing all three of them. Okay, I want to keep this as simple as possible. Okay, because it is that simple. Okay, it's not easy, but it is simple. Okay, and if you are having problems, we want to help you. Okay, we want to help you because I know for a fact, with no hedge, that we can help you be successful with this. Okay, if you follow the rules, it's very black and white. Okay, it is binary. It either is or it is not. It's very objective. Okay, it either follows the rule or it does not follow the rule, and that's how we determine if it's a trade we're going to take or not, right? And so, guys, I do want you to take this seriously. And so, but here are the three, because I do want to give everything to you. I don't want to hold anything back. Okay, so when you do start to become more advanced, you have all of it. Okay, so entry number one. This one's more aggressive. Okay, using Jed's support and resistance formula. Okay, Jed is one of our educators on IML TV. On his live session, okay, once price retreats 2 pips from that level, that's your entry. That's your entry. Okay, so short overview on the support and resistance formula is, you find support and resistance levels in that zone that you're looking at. Okay, so I drew this purple line right here at this high point at X. Okay, and so that was 1 point. I drew another one here. That was 1 point. The reason I drew this one here, came down, this came down here, found support, bounced up, broke through it, tested, rejected, tested, broke through, tested again, broke through, okay, came back, tested it right there again, and now it came back, and it came all the way down. And now it came back to it for the first time, okay, for the first time. And so that's why I took this trade right here. That's a pretty good resistance level right there. Okay, resistance at the top, at the ceiling, right? Support at the floor, right? So resistance up here, okay? So that's why I took that trade right there. So as you can see, all right, so let's zoom in a little bit, okay? So it came up, hit it, came up, hit it, and now we start to retreat 2 pips. So when it retreats 2 pips, that's when I get in. As you can see, it hit my resistance level right here at 87.63, and it came back, and that's where I entered. Okay, pretty cool, right? Now, what do you do when you enter? You got to have a stop loss, right? When you enter, because when you enter, you have to choose how many lots you're putting into the trade, right? So where do you put your stop loss? Well, what I'm going to do is 10 pips from that resistance level. Okay, so 10 pips from this resistance level. Let's measure it, okay? So 10 pips, I entered at 62, 87.62, okay? I dropped that last digit there if you're looking at the black number on the right, okay? 87.62, all right? So from there to up here, so 62 to 72 is where I would put my stop. So it would actually be below where the scanner tells me to put my stop. So hey, that's a win right there, right? So I put it at 72, and obviously, as you can see, it hasn't come up here, okay? And so now I'm winning in this trade, right? Now let's talk about the goal. What's the goal? The goal is 10 pips, guys. The goal is 10 pips. Let's keep it simple. The goal is 10 pips, okay? The goal is 10 pips. Very simple. So on here, where's 10 pips? Okay, I entered at 63. So 53 is where I want to see it. So 53, boom. It took, this is a 15-minute chart, so 1, 30 minutes, 45 minutes. It took 45 minutes to hit my target. How cool is that? Okay. Now, let's talk about this next goal here. Remember the 15% criteria that those studies used to determine success? Okay, the 15% is from the C to D swing. Okay, so we're going to do that or 10 pips, whichever is greater. Okay, so you can see the harmonics go X to A to B to C to D. So we're going to measure from the C to the D. We want 15% of that. So how do we do that? Well, we're going to bust out our Fibonacci tool. Okay, if you've never used a Fibonacci tool, I would encourage you to get in the IML Academy and learn about that, and it'll teach you how to do that. Okay, so we're going to take our Fibonacci tool. We're going to come down here to the C. We're going to click it, and we're going to drag this thing up to the D. Right there is where it ended. Okay, and see, I've got my 15% right there. I've got my 15% right there. So right here is where it won. Okay, like that's it. That's it. Now the problem though is this was less than 10 pips. It was 6.7 pips. Okay, you see the middle one, it says 67. Okay, that's 6.7 pips. Okay, 6.7 pips. So set around 7 pips. Okay, but remember the rule: 15% or 10 pips, whichever is greater. So I would have taken my 10 pips, and I did take my 10 pips right here. I took my 10 pips right here. Okay, now let's keep talking about the goals. Okay. Number 3. Now we're getting into some of the aggressive stuff or advanced stuff. Okay, pitchfork median. Okay, Pitchfork is another tool that we use. Okay, there's another IML TV live session that teaches you how to use pitchforks, but actually it's very simple. So I can talk about it here in about 7 seconds. Okay, so here's what you do. Actually, let me delete this one and I'll draw it again because it's very simple. You get your pitchfork tool up here at the top, right? Now, if you don't have this, then you got to right click, hit customize, and it's in here. Okay, just add it and you're good to go. Okay, so what I'm going to do, now that I've selected it, I'm going to find the X. I'm going to click there. There's point number 1. I got 3 points. I'm going to find the C, go to C. That's my second point, and I'm going to go to D. There's my third point. Now my pitchfork is drawn. Here's my upper channel. Here's my median. And then here's my lower channel right there, right? So this is an Andrews pitchfork. Mr. Andrews found out that it has an 80% chance of reaching the median, okay? Oh, disappeared. Sometimes it does that when it's refreshing. Okay, it'll come back. Don't worry about it, guys. Okay, so 80% of the time, it's going to reach the median. Okay, so this is my take profit, this red line right here. Okay, so I'm actually going to move this down. Okay, because it can hit right there. Right, it can hit right there. Okay, so that is one way to take your profit as well. Now, here's what I do, guys. When it goes 10 pips, I'm going to take my stop loss that was up here, right? And I'm going to move it to break even plus 2. Break even plus 2. That's where this is. Break even plus 2, okay? As you can see, it came back up, almost hit it. There we go. It's back. Almost hit it, but then it decided to go away again. Okay. So sometimes it'll come back and stop you out at break even, plus 2, right? Sometimes it'll do this. It'll come close and then it'll continue, right? This might hit this while we're on the webinar. That would be kind of cool. Okay. So that's that. Now, okay. Yeah, so I already said that. So when it moves, when it hits the 10 pips, I'm going to move it to break even, plus 2, okay? And then I'll just follow it behind. I'll just follow it behind. Now, here's how I do that, right? Once first profits are solidified, right, the 10 pips or the 15%, move stop loss to break even plus 2 and trail behind the new peaks, okay? So on a sell, I'm looking for lower highs. So this was a high right here. This was a lower high. This is lower than this, right? So this is a high, this is a high, this is a lower high than this one. So I'm going to keep moving my stop loss behind, okay? Keep moving my stop loss behind. Now on a buy, it's just the opposite, okay? Higher lows is what you're looking for, okay? And hopefully we'll look at some of those as well here, okay? So that's how you do that. Okay, that's how you do that. Very simple. Very simple. Okay. Let's talk about a couple more entries though. The other 2 entries. Number 2 entry is a more conservative entry. Okay. You want to see an engulfing candle close in the wanted direction, right? So if you want to sell it, you want to see a candle engulf the one next to it going in the right direction, right? So an engulfing candle just means you want it to basically engulf the one before. You want it to be bigger than the one before in the opposite direction, right? So you see how this barely, okay, closed underneath. So this candle right here is bigger than the one next to it. It is engulfing the one next to it. Yes, there are wicks, okay, I understand that. This is actually what's called a tweezer top, okay? I understand that, but, I want to keep this simple. The close of this candle closed underneath this one, okay? So that I would consider an engulfing candle. So that's where you would enter, and this just happens to be the exact same spot that I entered. How cool is that, okay? So you got that one, Okay. Let's see. Is that everything on there? Okay. So you got that, engulfing. All right. Now third one, another conservative one. What you're going to do is you're going to drop down to the 5-minute candles. Okay. 5-minute chart. And once a candle closes in your wanted direction, after doing all these, right, that's when you enter. Okay, so let's drop down to the 5-minute here. Okay, and let's bring it to the right. Okay, so it hit here, right? That was the D right there. Actually, this was the D right here. Okay, so what we want to see is a candle going down. So right here. So this right here is where we would have entered. Right here. Okay. Right there. That's it. All right? Very simple. Once that candle closes, okay, so right when this candle opens, right when it opens, that's when you can enter. That's your entry. Right there. Boom. That's it. Okay? Rules. Gotta love the rules. Okay? So let's zoom out. Oh, what's going on? There we go. Okay? Now, our stop loss, okay, I've got 1, 2, 3 entries. I've also got 1, 2, 3 stop losses. These coincide with the ones above, right? So the first one we already talked about, right? 10 pips from the support or resistance level, okay? That would have put us right up here, right? Number 2, okay, on the conservative one, on the engulfing candle closing in our wanted direction, you're going to put it 3 pips above or below the wick of the engulfing candle pattern. Okay, so this one, let's zoom in again. Okay, the wick is right there, right? I'm just to the right of it with my cursor, right? But you can see, right? I'm going to come down to it. Boom, that's where it, that's the highest point, right? So 87.65. So let's go up 3 pips. Oh, will it let me? Pretty close. Oh, yep, there we go. So 87.68. Right where that other purple line is. Okay, that's where we would have put our stop loss if we did that entry. Okay, obviously it didn't come up here. So that's a good trade right there. That's a solid trade. You would have taken 0 heat, one pip of heat. Okay, and when I say heat, I mean red. You would have been negative for 1 pip and then straight into profit, which that's what we like to see. Okay. That's what we like to see. I don't like this big drawdown stuff. I don't understand how people like to be in drawdown forever. I can't deal with it. Okay, I like to be precise. We're snipers out here. Okay, so number 3. Okay, the third entry, right, was the 5-minute candle. Okay, so we get the 5-minute candle. Okay, so let's drop down, and what we're gonna do is go 5 pips above or below the D point. Okay. Not the candle that we entered on, but 5 pips above the D point. Okay? So let's go to the 5-minute. The D point was right here. Okay? So we're going to go 5 pips above that. So 87.65. It won't let me go all the way up. It'll, I don't have enough space, but so 65. So we'll go to 87.70 is where we would put our stop loss. Okay? Pretty simple. Right, guys? You guys following along? Pretty simple to do, right? And then the goal, 10 pips. 10 pips. That's what we're looking for, guys. This is QuickFire. This is the QuickFire strategy. 10 pips, QuickFire, get in, get out, you're good to go. Okay? Then we'll get a new one. Okay? We got multiple, we got tons of trades coming through every day. Okay? We'll have ones that we want. Okay, we will have ones that we want. Okay, so that's that. I think we've analyzed this one pretty good. Okay, man, I hope this one comes down and hits while we're on. It doesn't look like it. It's got a ways to go, so it might not happen, but one can dream, right? So let's look at some other pairs. Okay, so let's look at this one here, NZD CAD. Okay, so New Zealand dollar, Canadian dollar. Okay. Let's bring up our list. Okay, let's bring up our list. Does price touch or move past the green entry line? Well, The green entry line is below this, okay? See, it's right there. So it does not go below. It does not go below. So that's a no-go. That has to happen. That has to happen. Okay? So that's not our trade. Not our trade. So let's move on to the next one. GBP, AUD. Okay. This one's kind of tight. Okay. Did it go? Let's bring out the list, right? Does it touch or move past the green entry line? No, it does not. So this is not our trade. This is not our trade. Is it already going in the direction we want? Yes, it is, but guess what? These are not our pips. These are somebody else's pips, maybe. Okay? These are not our pips. They did not follow our rules. The worst thing that can happen to a trader is you break the rules and you win. Because now you've just been rewarded for being undisciplined. Now your ego starts to come in and try and make you believe you're invincible. You can take any trade you want. Well, that's a good way to lose all your money. Okay? Don't reinforce bad habits. Stay disciplined with these rules, guys. Those ain't your pips. Let the others have those pips. Those ain't yo pips. Okay? There's always another trade. You'll get yo pips. Trust me. Trust me. It's not like this is the last trade on the planet. There will always be another trade. Okay? Wait for all your criteria to line up so you can walk away with some money. That's why you're here, right? Let's go to the next one. 80 cat. See, we're getting new ones as we're on here. Okay, we got 2 right now. Okay, so let's zoom in. Okay, let's bring the list out. Does price touch or move past the green entry line? Sure does. Look at that. Let's move to the number 2. Does price touch or go past the first Bollinger Band? Well, here's the first one here. Blew past that bad boy. We're on number 2, number 3, number 4. Okay, we're touching number 4 right there. So that's strong. That's a strong confirmation. Does RSI go above 70? Because we're looking to sell, right? Does it go above 70? Right here. Sure does. Sure does. That's 2 out of 3. Okay, so we're good to go for this one already, but let's check the last one. Is there divergence between price and MACD? Well, let's look. Here, let's back it up so we can get a little bit better picture. Come on. All right. So we'll go from here to the top. Okay. So that's sloping up. And then I have a feeling this one's going to be sloping up as well. Sure enough, yeah. So that is not divergent. But we got the other 2, right? We got the other 2. So if I would have seen this, this would have been a good trade. This would have been a good trade. Would we have our 10 pips yet? Let's see. Would we have our 10 pips? We'd be 9 pips. Okay, we would have been 1 away. We need 1 more. Okay, so we almost would have hit it right there. Okay, so that would have been that trade. All right, that one's already good to go. Okay, so we're winning that trade right now. If I would have seen that, would have been in it. Okay, unfortunately, I was prepping this for you guys. All right, let's go to the next one. GA, did I already do GA? I feel like I did. Yep, I think I did. Okay, 80 cat, I think I did that one too. Oh, that's the one we were just on. Okay. USD CAD. Okay. Did it hit the green line? Nope, you can see because it's still trying to draw it, right? So that's not our pips. Not our pips. All right. Let's look at these new ones that just came out. NZD CAD. Okay. So we're looking for this to hit the green line. Okay. It's going to hit the Bollinger Band. If it comes down, it's going to hit the Bollinger Band. Actually, the first Bollinger is right there. So we got that one. Okay. We're looking for, it's got to come down below 30. It's getting pretty close. So this could be a good trade right here. Okay. So, guys, I hope that makes a lot of sense. It's designed to be very simple. Okay, it doesn't get much more simple than this, folks. I hope you notice that every single one that we looked at in the history, every one that followed the criteria was going for the 10 pips, our goal that we wanted, right? Not one lost. Okay, be very picky about the trades that you take. There will be plenty of trades, guys. There will be plenty of trades. You can afford to be picky. Don't try to force trades. I guarantee you, the ones who force trades will be the ones who get frustrated. I'll tell you that right now. Okay? Don't force trades, and you will be just fine. All right, guys? So look, here's the deal. Get back to the person who sent you to this video. Get back to the person who added you to our group and get in. This is only one of 7 products that we have. This one product here alone can set you free. This one strategy can set you free. And in fact, we've got a couple more strategies that we can't wait to share with you on the inside. But this is kind of the favorite of the group because it's so easy to teach and so easy to do, and it makes people money. Okay, so get back to the person who sent you here. Get their link and join now. Learn how to do this. Master this, on a demo account first, and then go live when you are ready, when you are producing consistent results, and set yourself free. I hope you enjoyed this video. I hope you have a great day, and I look forward to seeing your success. I'll see you at the top. Take care. Bye-bye.